So good afternoon and thank you all for joining. Just some general housekeeping before we begin to make it feel a little bit more normal. There is no fire drill today, so if you hear a fire alarm, you may want to check your kitchens. Thank you to everyone that submitted questions in advance. You also have the opportunity to submit questions on the chat box on the page here on the right hand side, which we'll go through at the end. Just some quick introductions. So I'm Josh Levy, Chief Executive of Ultimate Finance. I'm joined today by Neil McMyn, our Chief Financial Officer, and Shaun Purrington, the Managing Director of Avenue Insurance. Both Neil and Shaun will be talking through a few topics as part of this today. So being part of the Tavistock Group with over 200 companies of different sectors and sizes around the world gives us a very unique perspective on what's happening at the moment. Not just as Ultimate Finance with over 2,500 clients that we interact with on a weekly basis, but also as investors, and most importantly for the purpose of this conversation,
is now joining
as operators of businesses. We understand the pressures and challenges that the current situation brings to all of us and the impact on businesses, large and small, strong and weak. As a group, as Tavistock, we've had to make some difficult decisions in the last few weeks, and this has led to the use of furlough schemes, pausing development projects, closing 1,800 pubs and restaurants. So the things we're going to be talking about today, we are living and breathing for many different purposes and reasons. So from an Ultimate Finance perspective, we're here to support our clients through this crisis. We have to recognise what it is, and it is a crisis, very much so. The purpose of this call is to provide some guidance on the range of government support options available to everybody. The two main areas of insight we'll try and bring kind of relate to the funding support scheme that the government have introduced, along with the job retention scheme, and that's where the focus of much of the questioning beforehand has been. We'll also be talking about some other income and cost measures that will be of benefit to you, how debtor protection, credit insurance can protect you, and some mental health and wellbeing tips that we're adopting and may be useful to different businesses as well.
Is now joining.
In crisis times, businesses that adapt quickly will survive or even gain a competitive advantage. But where we are now, wait and see is not an option. We expect kind of the house view is an economic U-shape from here. The key questions being how deep will the fall be and how long will it take to bounce back? So the decline phase of the U-shape has very much begun, and we're all feeling it now. It's critical that we are all collectively and individually doing everything we can to prepare ourselves for the dip ahead. I think it's fair to say that depending on the pre-crisis health of your company, a variety of strategic cost and people-related initiatives can be applied, and we'll go through some of these today. So let me just get slides up for you. So hopefully you can all now see this. Let me make it larger. So we'll start with funding. I think this will be clearly the focus of a lot of questions, and we'll try and bring some light to the somewhat shady scenario that's gone on with the coronavirus business interruption loan scheme that's been introduced, and bring some clarity where there hasn't been to date. This is the centerpiece really of the government support package for businesses, and it's generated a lot of noise, criticism, and commentary. And we've, through our relationship management team, have fielded a lot of questions about this. So firstly, what is it? So many of you will know the outline detail, you'll have read about it online. Through the British Business Bank, the government are providing accredited lenders with a guarantee of 80% on each loan to businesses disrupted by COVID-19. These are loans of up to £5 million for terms of between 1 and 6 years, with the first 12 months interest free. I think importantly, borrowers remain fully liable for the debt. But as of Friday just gone, no personal guarantees can be taken on loans under £250,000. For any loans that are above £250,000, personal guarantees are now limited to a maximum of 20% of the loan size. And importantly, primary residential property is excluded from the security package. Eligibility. So this has been loosened necessarily in recent days as well, alongside the same announcement around the personal guarantee situation. But at a high level, it's open for
leave but to us.
Is now joining.
Of up to £45 million turnover, and it applies across most sectors. The first step you have to take is you must self-certify and demonstrate that you've been adversely impacted by coronavirus through lost or deferred revenues. Then you need to be able to show a lender that were it not for coronavirus and the current crisis, you would be considered viable by that lender, and that additional finance will enable the business to trade out any short to medium term difficulty.
Is now exiting.
So there's two aspects of that really. The key one is viability. So viability would appear to be judged to some degree on whether a business was profitable last year, at least on a monthly run rate basis towards the end of the year. So the loosening of some of the criteria that came on Friday, the two conditions that were removed, one was about being unable to secure regular commercial financing, and the second one was around insufficient security. So these were previously hurdles that you had to go through to be eligible for the scheme. These have now been removed, and that's a positive step, along with the kind of clarity around personal guarantees. So the bit that's not necessarily been publicised as widely as it needs to be is really the amount of the loan that you're eligible for. So it's likely, and it depends partly on which bank you talk to, but the loan amounts are restricted to the greater of twice your 2019 wage bill or 25% of your 2019 turnover. So how do we access this? So probably to start with, which is worth saying, Ultimate Finance are not currently an accredited member of the government scheme. So we are unable at this stage to offer these loans. There's currently 40 banks and lenders who are accredited through the scheme, many of whom are only focusing on existing customers for the time being. Most of these are traditional lenders, the high street names you'll be familiar with. They are inherently slow moving, have strict internal rules that dictate long lead times. The scheme itself is also pretty operationally complex. The British Business Bank management of it has been under criticism as well. They're trying to re-engineer the process to fix this and try and alleviate some of the pinch points in the process. Alternative lenders, such as us, have been pushing hard over the last few weeks to try and gain access to the scheme. So what we're trying to achieve is a widening of the scheme so that the agile and faster moving lenders can play a part too. But as of today, this isn't the case. Your first call needs to be to your main bank, and I know a few of you have already been doing this. Given the recent criteria loosening, if you've already spoken to your bank and have been turned down, I would strongly encourage you to try again. The changes do make a big difference. Most of the banks have published their criteria and their requirements online. Some actually have online application processes, which hopefully can speed things up at the start of it. So the document requirements, again, vary slightly between the different lenders, but generally they'll cover the same things. So management accounts, filed historic accounts, a business plan with cash flow forecasts, and a statement of business assets and liabilities. That's what most of them will be looking for. So just some practical points that we can try and bring some insight from where we're seeing the current situation. The speed at which support arrives will determine the success of the policy intervention. It's a very obvious statement, but the loan scheme alone won't be the answer to everyone's prayers. And so all the measures we'll go through today should all be combined to try and give you the best chance of success. As of Friday, only 1,000 approvals have been given out of 130,000 applications. Process delays are unfortunately inevitable given the resource constraints at the banks and sheer volume that they're having to deal with. I know this is painful, but you'll need to be a little bit patient with the banks as you go through this. They're coming under massive pressure from both the government and also for the massive amount of applications they're receiving. Despite the guarantee that's in place, these loans are being provided by commercial banks. They have a duty to confirm viability. They also have a duty to ensure there's potential for the loan to be repaid. This is why the box ticking exercise you have to go through, whilst it will feel a little bit cumbersome, they need to do it as well. So a few practical tips just to give yourself the best chance of accessing these loans. Firstly, make sure you're providing as much information as you can in the format requested by the lender in the early stage of the process. That will definitely benefit you. You don't want to be coming back and being asked questions unnecessarily if you can provide that up front. Be very clear on the purpose of the loan and how it will be serviced and how it will be repaid. Also how you are being impacted by the current crisis, and state clearly why you believe, and you have to make the case for this, why you have the talent, the product and the service proposition to thrive again when the economy rebounds. Have a great story. Try and articulate it as best as you can about the long-term confidence that you have in the business, your vision, as well as your strength pre-crisis, because that strength will be seen through different lenses, not just in numbers. You'll hear from Neil shortly on a number of things, including actually how you forecast or how you can start to forecast through uncertainty. But being able to present a confident and logically deliverable plan will provide a lot of comfort to the lender about your viability. There's two other aspects we've got on the bottom right hand side here. I won't spend any time on the loan scheme for businesses with turnover above 45 million. But the key point for all of us is that when this funding is provided, it will provide support for medium-sized businesses across the country, which inevitably will support the flow of payments through the supply chain, which benefits all of us. Likewise, on cash grants, there were a couple of questions on this. There's more detail that we will circulate afterwards, and there's some reading on this online. But at a headline level, there's two grants here. The £10,000 grant is determined by the rateable value of your premises and will be applied directly by your local authority. The £25,000 grant is specifically for retail, hospitality and leisure businesses and will be applied similarly as well. If you're in any doubts on any of these, then I'd encourage you to speak to a local authority. They'll know your rates situation as well as anyone will need to. So with that, I'll hand over to Neil to talk you through some aspects on cost.
Great. Thank you, Josh. So I'll start with the job retention scheme, and similar to the CBILS, you'll probably all know a lot of this anyway, so I'll run through some basics and some insights from us. So what is it? So the scheme offers financial support to retain employees that would otherwise have been laid off due to this crisis, and allows the employer to get back up and running quicker when the crisis is over. It adopts the use of furloughing, which is a type of temporary leave during which the employee remains on the books of the company but does not do any work for that employer. Employers can reclaim 80% of the pay of the furloughed workers from the government, up to a maximum of £2,500 per worker per month. And it'll also reimburse employers' national insurance contributions and auto-enrolment pension contributions on that 80%, so that's in addition, but it will not compensate for apprenticeship levy. Employers are not obliged to pay the remaining 20% of salaries, but they can if they wish. The current scheme runs until the end of May, and applications can be backdated to the 1st of March if appropriate. So it covers that 3-month period.
Is now joining.
So who's eligible? Well, it covers all employers that had a UK bank account and operated a PAY scheme at the 28th of February, and all employees that were on those payrolls at the 28th of February, regardless of whether they're full-time or part-time workers. During the furlough period, employees must do no work for the employer, so the scheme cannot be used to support workers who continue to work on reduced hours. The rules do allow furloughed workers to undertake training while they're on furlough or do volunteering work elsewhere. There's a minimum furlough period of 3 weeks, and it cannot run alongside statutory sick pay, so employees on sick leave or self-isolating, which means that the 3-week period would only start after SSP ends. So this could be important for the qualifying for that minimum term. But interestingly, one of the more recent changes that employees can be furloughed if they're shielding or with COVID-19 related caring responsibilities, for example, childcare due to school closures. So how do you access it? Well, the government are setting up a portal for businesses to claim scheme payments. The details you'll need to make the claim include your PAYE reference number, the number of furloughed employees, the amount claimed, and the bank details. And to speed up the process, we recommend you make sure you're already enrolled your business for PAYE online. The HMRC portal is due to be live before the end of April, which means March wages need to be paid ahead of reimbursement. So hopefully it's only going to be March that you'll need to fund, businesses will need to fund, with subsequent payments coming through when staff need to be paid. We're told that some banks are willing to extend overdrafts to cover the period between wages being paid and the reimbursement. So if this is a problem, that's a good place to go. And if you really have to wait until you receive cash from government before you pay the staff, then technically this is a breach of their employment contract. So you would need to agree that with them in advance. You'll need to calculate the amount you're claiming yourselves and should keep good records of this, because HMRC retain the right to retrospectively audit all aspects of claims. And how do you go about furloughing staff? Well, technically, it is a change in employment contract, so it needs to be agreed with the employee and notified in writing of the change in their designation to a furloughed worker. Which employees an employer decides to furlough will be a matter for negotiation in employment law, and of course, an employee does not have to accept furlough if it's offered, but then the employer could make the employee redundant instead using the usual employment law procedures. Employees can be placed on furlough more than once. So in theory, employees can be rotated on and off furlough as long as it's for a minimum of 3 weeks. They could then come back to work for a week and go back on furlough after that, all within the initial 3-month period. Some other insights that employees, so this will work just through normal payroll. Employees will be paid through payroll and they pay taxes they would normally pay out of their wages. The compensation payments are actually grants and they're taxable because they cover the deductible expenses. Company directors, there's not that much written on this, but it is expected that company directors may be furloughed and still carry out their statutory duties as directors for this duration, but they shouldn't be doing any general commercial activities to generate revenue. The 3-week qualification period has to be continuous, and it would be interrupted if statutory sick pay applied at any time during the furlough period. So that's one thing to bear in mind. And we think it's really important to continue to communicate with furloughed staff and keep them in touch with progress in the business. Some people may welcome being furloughed as it may help them look after children or provide care to vulnerable people, but other people may find it more difficult. Staff may be worried about whether they've got a job to come back to. So moving on, oh sorry, there's 2 other schemes as well. The job retention scheme applies to people who are paid through payroll, where income is derived from on a self-employed basis, usually as a sole trader paying income tax. The income support scheme applies instead. It provides a taxable grant worth 80% of their average monthly profits over the last 3 years, up to $2,500 a month. So it's a similar level of benefit. And that scheme is open to anyone with trading profits of £50,000 or less, and for whom the majority of that income comes from self-employed work. And finally on this is the sick pay rebate. So this is some help, but of less value. As you probably know, employers must pay statutory sick pay to any employee who's eligible for it and has to self-isolate. SSP is payable from day one and the waiting days have been waived. But the government is now helping a little bit by reimbursing employers for up to 2 weeks of statutory sick pay with anyone off work because of COVID-19. And this is only available to employers of less than 250 people as at the end of February. So there are some other areas that government's helping. One reasonably significant one is VAT deferral. So payments normally due from businesses before the end of June 2020. So this VAT quarter can be deferred until March 2021 without any interest or penalties. Businesses can choose either to pay as normal or to defer the payment. There's no need to tell HMRC in advance. But if you normally pay by direct debit, you'll need to cancel the payment, or the payment will be taken as normal. For subsequent periods, VAT due after the end of June will need to be paid as normal, and you'll need to submit your VAT returns on time, whether you intend to pay or not, and HMRC will continue to process VAT claims and refunds as normal during that period. Just as a practical tip, if you ensure that all invoices are issued promptly in this quarter and declared in this VAT period, then that will maximise the deferral you can benefit from. Time to pay is further support available from HMRC through agreeing payment plans or time to pay arrangement with them over tax that's due. HMRC have been told to show much greater support and flexibility on this than ever before. Companies should access it by calling the dedicated HMRC helpline, and in general, it's advised to contact HMRC at least 1 or 2 weeks ahead of any payment being due. Have your tax reference numbers and the business address HMRC have on file for you to hand when you make that call. And we're told that up to 12 months support is available for payment plans without any internal referral within HMRC. It's typically used for corporation tax payments, but we know as well that HMRC are being lenient on timing of PAYE payments right now as well. So that's good to take advantage of. Excuse me. Business rates. So there is a business rates holiday for the 2021 tax year introduced for businesses in England who operate in the retail, hospitality and leisure sectors. And that will be applied to bills directly by the relevant local authority. So that's fairly specific. There's usually also a 3-month rates relief available for empty buildings, but it's only generally available when the property has been properly vacated, so cleared of all furniture, which is not likely to apply to us all working from home just now. But if any businesses are having difficulty paying rates, it could be worth contacting the local authority to ask for some assistance. And then on rent, businesses that can't pay their rent this quarter have been protected from eviction, meaning that there's no automatic forfeit of leases until 30th of June. And while the government's made it clear that that's not a rental holiday and that payment is still due, some businesses are taking it as an opportunity not to pay. It's a bit of a risky approach, as contractually the tenant will be in breach of the lease and the landlord could take action at the end of the 3-month moratorium. It's important to engage proactively and constructively with landlords. And while landlords might not reduce rent, they are also facing uncertain time themselves, and many will be open to accepting rent on a monthly basis rather than quarterly in advance, which can all help cash flow. So on the next slide, thank you. So thinking about cash flow and other costs, we should all expect some level of negative impact on income and profit through this period, and some will be more severe than others. But all businesses need to control their costs now more than ever due to increased uncertainty on income and to be resilient through this period. The main fixed costs within a business are often payroll and rent, and we've already discussed job retention scheme and some options for rent and potentially deferral of some of those costs, which is more about cash flow than cost saving. But we all need to look very closely to our variable costs and determine what can be reduced. So just as an example, marketing may be essential if a sector is benefiting in this time, but if activities died, it may be wasteful to continue with normal spend. Travel and entertainment will likely reduce significantly for most of us, but if not, we need to consider what we should be spending. Investment's interesting. We need to review all projects. Some could stop immediately. Some may become more important and represent opportunity and should actually be accelerated. And this is not likely to be the best time to take on large capital projects unless the business is absolutely certain of its funding. Put all recruitment for non-essential roles on hold. And here communication is essential. Let your creditors know what you're doing so they don't get worried, and work with customers to find a way for them to pay you without causing themselves serious difficulties. Talk to your lenders. On actual cash flow forecasting, it's really important to ensure businesses have sufficient cash to see them through this crisis. It can always be difficult to forecast cash. When the economy is good, you can have more confidence in the assumptions and there's likely to be a bigger margin for error. But in the middle of an event like this, it's very difficult to know when cash will be received on sales or how quickly you'll need to pay your suppliers. But it's important to try. You need this to manage your businesses properly, and your lenders will need this to see the impact of the lending and how it will be serviced. It's best if an experienced person in the finance team puts it together. They know the income and cost of the business very well, and they're usually pretty capable in Excel. And depending on what size of the business, you can start with the bank statements. This shows the facts on how cash has moved. Some accounting packages also give a very good starting point. Look at recent history to understand patterns. If you have a seasonal business, go back over one cycle so you can reflect it in the forecasts. Don't be daunted by it. Build it up in steps. Start with what you know: committed sales and purchases, recurring overheads. Normally you do this for 12 months, but given how quickly this is moving, I'd prioritize the next 6 months, if not shorter. That said, lenders will normally want to see a minimum of 12-month forecasts. The objective clearly is to identify whether you have enough cash to get through the whole period, not just enough at the end. Identify the amount and the period of potential cash shortfall and see what you can do about it. Some of the more difficult things to predict right now: customers are paying slower than normal, but how slow? Will they be able to pay? How long will it take to fulfill your orders? How is this affected lead times on supplies? Will you have enough staff? How many of them are self-isolating? Can you operate at all? Are you in an industry that's in or supplying an industry that's in lockdown? When will lockdown be lifted? You need to make assumptions for each of these uncertainties. Apply logic to deciding what assumption based on experience, knowledge of the parties involved, economic indicators and forecasts, and note them all so that a user of the forecast can assess them. And ideally build a model around drivers, sales growth, credit terms, staff numbers, interest rates, etc. So you can run sensitivities. But it doesn't have to be complicated. Better to produce something that works and tells a story on expected cash movement than taking too long to perfect the model itself. You can do rough sensitivities. For example, your base case does not show a cash shortfall, but if customers pay in 90 days rather than the standard terms of 45, you'll need to cover another month and a half of overheads. And build in a contingency, or aim to hold a cash buffer through the period. It will give a cushion for things not going as modelled or for other unforeseen events. And irrespective of whether you identify a cash shortfall, you should definitely take actions on the costs, as I've suggested, and there'll be others. You should definitely get as much government help as you can from all of the measures explained here. They've been designed for that purpose, so take advantage of them. And build these into your cash flows, bearing in mind the lead time to benefiting from the change and ensuring there's sufficient cash to cover all repayments and interest when they're due. And if you still have an issue, please speak to your Ultimate Finance relationship manager, who will do what they can to help. Thanks. Shaun.
Thank you, Neil. So my role on this call is to explain how individuals on the call can take advantage and access Ultimate's debtor protection facility, how it works, and why perhaps it's now vitally important, more than ever before, to consider or even continue insuring and protecting what is for many businesses the largest asset on their balance sheet. The credit insurance market that sits behind all debtor protection type facilities is changing too, absolutely rapidly. So I'll quickly prepare existing users for what the future might hold. So debtor protection from Ultimate really is the closest any client will get to a cast iron guarantee that if an invoice that qualifies for funding is not paid by the debtor due to insolvency or for reasons of protracted default, Ultimate, calling upon its own credit insurance policy, will make good most of the loss. Debtor protection right now is incredibly high profile within Ultimate Finance because insolvencies are now forecast to hit really grim new heights in the months ahead. So it's really a call to action for any non-users out there to take what I would call a closer look. And for those who already take cover, it's a good time to reacquaint yourself with how the facility operates and that it remains fit for purpose. And what I mean by that is that, for example, all of your debtors are currently covered. So unlike most of what you've already heard today from Neil in particular and Josh, debtor protection is not a new type of business support. It's not government backed and it's not temporary or short term. Ultimate's been offering this service to its clients from the very beginning. And I know that as Ultimate's preferred broker, that around half of the current portfolio of clients make good use of it. Now, the other half maybe have not seen the value until now, or maybe didn't know anything about the facility, or maybe they just prefer to just cross their fingers and hope bad news doesn't arrive. But the good news is, and I think it's reassuring, during 2019, Ultimate offered protection to over £220 million worth of invoices it funded. And that's, by the way, a record high figure. So stripping it right back to its basics, what is debtor protection? It's a feature that wraps around your funded invoices and protects them, as I say, in the event of insolvency or extended delay of non-payment. If you suffer a credit loss, Ultimate very promptly will refund up to 90% of the invoice value, excluding any VAT. The reason VAT is excluded is because you can adjust that through your normal VAT return. It works as well. Just to reassure you that Ultimate has made many claims since I've been involved in the policy over 5 years. And that equates to hundreds and thousands of pounds worth of financial lifeline, making a positive difference to cash flow. And in some instances, I know making the difference between the company's failure and staying on to trade another day. But perhaps most importantly, given that a credit loss can pull a business down, Ultimate takes great comfort from the security offered by debtor protection, and it normally helps to enhance credit lines and keep cash flowing at the worst of times. I just wanted to raise a couple of key points. There are two considerations before you leap forward. The first one is of course cost, and I've said on the slide there that normally you will pay no more than 1% of your turnover for cover. But this cost needs to be seen in the context of the benefit, that near guarantee of payment for most of the credit loss, and again, often a financial lifeline, and the difference between success and failure. We know that many businesses work on the basis of very small margins, so even the smallest of losses can hit a business hard, and lots of extra income needs to be generated to cover it off. And of course, I accept that businesses with higher margins can, to a certain extent, insulate themselves a little easier from the impact of a bad debt. But in this current predicted high insolvency environment, this is increasingly looking like a one-way bet. The second is that companies using any debtor protection facility need to make sure they have a valid credit limit in place for each debtor they're trading with in order for a claim to be valid. The insurer sitting behind Ultimate's debtor protection has to make a judgment as to the creditworthiness of your debtors. Most of us are familiar with using a status report from an information provider like Experian, Dun & Bradstreet, CreditSafe, and so on, but it's only the insurers who back their opinions and their credit limit decisions with indemnity. So an insurer will always take a deeper look, a deeper judgment based on financial information, payment behavior across millions of existing customer transactions, and future trends and forecasts. And at the moment, it's the future trends and forecasts linked to this current crisis, which have forced many insurers to reassess the risk they're taking. And Ultimate's insurer, Euler Hermes, is no exception. It's clear to everyone in the industry that extending, monitoring, and then insuring trade credit has just become much more difficult, almost overnight. In some sectors, like those feeling the immediate and obvious pain of COVID-19, aviation, hospitality, retail, hotels and leisure, some construction, and there are others, risk capacity is quite scarce. But for others, capacity is well and truly available. And certainly the insurer, we know from recent experience sitting behind the Ultimate program, Euler will always be willing to help businesses that are helping in and supporting the fight against COVID-19. So if you're an existing user, it's true that credit limits will not be as plentiful as 3 months ago or even 3 weeks ago. But at the very least, if you're currently a non-user, it feels prudent and costs nothing to ask the question of your relationship manager, can I insure my trade receivables? And they will give you some guidance as to the insurer's risk appetite to insure your trade. I really would encourage everyone who's a non-user to give this more thought. Please be in no doubt, insolvencies will rise significantly, maybe up to a 5-fold increase on the original predictions shared recently. And I mean recently being the beginning of this year. Some commentators are forecasting a 1 in 6 failure rate. The trouble is the insurers, and we don't know either, which company will be the 1 in 6. And of course, the number of high profile names keep hitting the headlines. And even some well-known, large and respected brands could fail too. So my point is that if you currently use debtor protection, either with Ultimate or with your own policy with another insurer, and maybe even using us here at Avenue as your broker, it's inevitable that you will see some existing credit limits reduced or removed, particularly in the highly distressed sectors I referenced earlier. My personal view is that such reductions and removals will undoubtedly be temporary. And we can all take some comfort from the fact that cover and protection will never ever be removed retrospectively. And what I mean by that is that any invoices financed up to the date of limit reduction or removal remain insured. I wanted to give you just a balanced review of Ultimate's debtor protection option and the credit insurance markets generally. It's a great facility, it really works, but it's a little harder to come by now, and it may not be available for every customer you trade with. But this is just the new norm, hopefully a temporary norm. And it's such a valuable type of insurance, and there's huge surge in demand at a time when the credit markets are incredibly challenged. But, and I feel very passionate about this, it should be a key part of your trading strategy now and as the economy comes out the other end, which it will. So for me, to summarize, if you're currently a non-user, it costs nothing to inquire and assess feasibility. If you would like to know more, speak to your ultimate relationship manager. Equally, if you're an existing user and you have some concerns, again, speak to your relationship manager. They are an excellent resource. And just finally, if Ultimate cannot meet your data protection needs, and sometimes they won't be able to, they will work closely with us here at Avenue to approach the wider credit insurance market to examine and explore whether protection is available. That's all from me. Thank you for listening, and back to you, Josh.
Thank you, Shaun. Just want to wrap up and just talk about one other topic, which is kind of mental health and well-being. So over the last 12 months at Ultimate, we've spent a lot of time and effort and energy raising awareness of mental health challenges within the workplace and making sure we're providing our teams with appropriate support. This period for all of us, whether we're business owners, managers, or all of our employees, brings its own stresses, whether that's anxiety, isolation, fear, uncertainty. You'll all recognise some of these feelings right now. These are all rational responses to a somewhat scary situation we're all dealing with. The key thing is we're not alone. We must also make sure our teams do not feel alone. All employers, and I strongly believe in this, can play a role in supporting the well-being of staff. Many people remain reluctant to talk about the mental well-being. It's a very sensitive topic, but it's going to remain a sensitive topic until we feel comfortable enough to talk about it. So I just wanted to give some guidance in case it's helpful to your own wellbeing strategies on what we're doing and what the key principles we're trying to abide by in this time of kind of heightened need for communication and going forward. So firstly, you should ensure that all staff have access to informed information about the external environment, the future of the company, and your strategic response. When in doubt, over communicate. So what we're doing is we have a once a week all company video call, and we invite questions and we update the entire business on how we're seeing conditions and what we're doing to respond to it. We also offer an employee assistance program, which is a valuable resource. We've also got trained mental health first aiders for all staff to have access to and to speak to when they need to. It's important also not to forget physical health. So depends where lockdown measures go, but right now this is critical. So exercise is very important to good mental health as well as physical health. So don't neglect it. Stay connected to colleagues, stay connected to friends, family through video calls, through virtual coffees, virtual drinks. So you would have seen lots of images and people sharing this sort of stuff on social media in the last few weeks. We do, and we encourage our managers to have virtual quizzes, and the resource of this, Microsoft Teams and other aspects, can be very handy in this. And I would encourage you to start the conversation around mental health and keep it there. Continually raise awareness, make sure people know that they're not alone. But also provide guidance on how they can manage their mental well-being during a time like this. There's lots of brilliant guidance and support packages online you can use to help this. Mind, the charity Mind, is one of the best places to start if you need additional support. And I'm happy to talk about this in more detail if anyone's got any specific follow-up questions, because this is a topic we spend a lot of time dealing with internally, because I think there's a lot of people within the business that feel very strongly about it, which is great. So as a conclusion on how we can support you through this time, so you've heard a lot about the measures that exist to you. And before I come to some of the questions that have been asked, so we're not on the government loan scheme. We're also not a bank, and we're not receiving currently any direct assistance from either the government or our banking partners. But what we will seek to do, and this is our kind of brand promise, and you're hearing it from me today, we will seek to provide support where we can through your relationship manager, and also through the insight we have into available support measures, and we'll continue to do this sort of communication if it's helpful. For your specific needs as businesses and business owners, I cannot stress enough that you should continue to engage in regular dialogue with your relationship manager. This covers things such as support on late payments, extensions to prepayment levels, whatever else you're dealing with. Just pick up the phone, email your relationship manager. They are ready to talk to you at any time you need it. We have a significant amount of resource internally ready to process some of these amendments that I just touched upon. Should obviously they be justified through a credit process, but as I said, your relationship manager will look to work through your challenges on a case-by-case basis. One thing that did come up in some of the questioning is around late payments. So we didn't touch upon it in some of the cost measures, but clearly Neil mentioned it briefly in terms of engaging with your customers. Strong and proactive credit control, management of your customers and your suppliers is a key aspect of your response to this. Where we perform your credit control, and I know we do for some of the businesses that are on this call, please speak to your relationship manager or your credit controller if there's any specific customers that you'd like additional support on with more active chasing during this time. Another measure that some of you may be eligible for, just mention it briefly here, is tax credits for R&D. HMRC is still paying out within the usual 4 to 6 weeks time frame. This can apply to businesses who are paying corporation tax and that have or are considering active projects that involve research and development to make advances in science and technology. If this sounds like it could apply to you, then there's more detail available on the government website. If you just type in R&D tax credits, or please speak to us so we can connect you to a firm that specialises in this if that's helpful. We've had a lot of questions that were sent in advance on the specifics of the interruption loan and job retention schemes, which hopefully we've covered off here. I think it's important to say that the level of government support provided is without any historical parallel. The key is how quickly and how widely the support was able to reach the households and the businesses that need it. We're doing what we can to try and get access to some of the measures, but the banks will play a massive role in this. And this is down to them to deliver right now. Some have asked about timelines from here, and Neil talked about it in terms of assumptions for how you project going forward. We're working on the back of kind of 3 waves of 3 months. It feels like an appropriate modelling assumption. If the decline period lasts longer than this, remember the U-shaped wave, I would expect the government will need to intervene further, and they'll have pretty much little choice but to do so. But it's hard to see how that plays out right now. We've had one question on the chat I just want to talk about, which is the impact of TUPE on the job retention scheme. So this is actually a grey matter in terms of the rules as they're set up. So the government advice at the moment doesn't currently deal with the situation of what happens if an employee or employees are TUPE transferred to a new employer after the 28th of February. And so they would sit on 2 different payrolls in theory between March and February. So there's 2 readings of it. One is that they weren't on the same PAYE payroll on the 28th of February. The second is actually the scheme is not intended to be prescriptive on every single scenario, but the aim of the scheme itself is to protect jobs, and there doesn't seem any logical reason that employees who have been transferred under TUPE during this period would not be covered. So while there's not a definitive answer on the question that I can find right now, or we're certainly happy to take it away and have a look at it, but it does seem likely that they'll have to clarify these rules and you would be covered. But I think just keep a watching brief on that and see where it goes. So if there's no further questions, I will just say thank you for dialing in and thank you for joining. It's taken a bit, we've gone over time a little bit, but hopefully it's been useful as a resource. And I'm happy to take any further questions after this if you follow up with either your relationship manager or through the email address where the invite came from. So thank you very much.